Baidu. In the far left-hand corner at the very beginning, we show a 17-week cup with a handle, and it takes off and really has a huge advance. Now then you get caught with a bear market in 2008, and the market corrects all the way back down. However, the one thing that you now know about this stock is that it is capable of being a big performer because it is giving you the precedent that when it broke out, looks like it's around the $12 area, and it ran to up in the low 40s, that's a pretty tremendous advance percentage-wise in a very short period of time. So you know that this stock proves that it can be a big winner. Now, it isn't going to be a big winner when the market's rolling over and going into a bear market for more than a year. So it comes back down, but as it's coming back up, once you finally get a follow-through day, at some point as you're watching each week moving up off the bottom, you had 1 week up, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks. At some point in there, you figure out that this stock is being supported by institutions, and I've drawn a curved black line there that says 5 weeks inch higher. Each week inches up just a little bit more, a little bit more, a little bit more, a little bit more. That's institutional buying, and it's finally telling you that they're in there and you can be buying it at that point. Now, we didn't buy it just because it's coming up off the bottom to begin with, because we went through a horrendous general market correction. The stock itself had huge drop, far more than 50%, so you just don't be buying that off the bottom just because it's rallied up for 2 or 3 weeks. But after you had week after week, and particularly the way it was closing near its peak in that 4 or 5 week period where it closed fairly close to the week before, but it's inching up and inching up and inching up, and 4 out of the 5 weeks were closing at the peak. There's your institutional buying, and you step in and buy it there. So you're having to read what's going on at any point in a pattern. Now it rallies on up and builds its handle in the upper part of the overall giant cup with a handle, and you can see that the handle drifts down, and so you get your pull back to the line a couple of times, and then you get your buy point. We add, again, it rallies up and pulls back, but it gets support at the 10-week line, which you can buy as it bounces back off that. Now, the next buy looks like it's occurring in the March 2010 period, and you can see where it's marked the buy. And that goes up 13 weeks in a row and then starts building a flat base going sideways. But it had 5 weeks that it closed in a very tight range, which is, again, telling you that it's getting support at that area. So we add as it undercuts one time and turns around and comes back up through the line. And then we get another support bouncing off the red line, rally up much further, and now we build a cup with a handle, and that's in the March 11 period, and it runs up. Now, the sell point. Notice that these bases that we had going up, you were buying coming out of a handle that was tight, other areas that were tight, and you didn't really have an awful lot of correction. So this correction is much looser than any of the prior ones. So you collected 3 weeks down and the volume picks up. 4 largest volume weeks in the base were down weeks, so all above average, and you close all the way back for the first time to the long-term moving average. That's probably a 200-day moving average, the black line, and then you come straight up off the bottom and you just go sideways for 1 week, and then you try to break out a new high ground. And of course, this is straight up from the bottom, and that's risky to buy any stock coming up. It's a little intricate as to how you recognize that, but the point is you corrected substantially, and virtually almost every week you go straight back up off the bottom into the new high. You had 1 week that it went sideways, and then you went into your new high attempt. And it stalled because the pattern wasn't proper and wasn't right. It came straight up off the bottom, and going all the way from the bottom to the top that quick, usually you have a failure, which is what happened. So we would be selling into that, particularly when you see that the volume picks up on that second blue week and it stalls, closing just barely up for the week. So intricate details all mean something.